Welcome to the CEC report. It's the 28th of July. I'm Robert Barwick and I'm joined today by CEC researcher Jeremy Beck. Welcome, Jeremy.
Thanks, Robbie.
In this week's CEC report, banking crisis update. Costello is half right. We don't need an inquiry to break up the banks. And stop bankers using workers' savings to cook up privatisation scams. So first, Costello is half right. We don't need an inquiry to break up the banks. This week, Peter Costello said a pack of lies to it's called the Financial Services Council Leaders Summit in Sydney. And incidentally, a few weeks ago, we reported in our alert service that financial services is now the biggest sector of the Australian economy. Right? And in fact, as a sector of our GDP, it's bigger than the City of London is for the UK, which is a really big deal. Anyway, so this is taking over. Costello is the chairman of the board of guardians of the Future Fund. He's the greatest living treasurer and all this rubbish they carry on about. But I would argue that he is one of a handful of people who deserve the most credit for the destruction, the neoliberal destruction of the Australian economy. Anyway, so some of the lies he said at this event were, there is no need for a banking inquiry in Australia. There's not been the kind of illegality that was rife like you saw in the United States, etc. So forget about that. He said Australian taxpayers didn't bail out the banks in 2008, and that is a crock. If the Australian government had not have done things like the guarantee on the banks, the triple guarantee they gave them, including the first homeowners grant. That's an important one that cost taxpayers a lot of money.
And increasing it too.
And increasing it, and that was to prop up the banks, not for householders, because it didn't make houses more cheaper, it made it more expensive, right? It was to prop up the banks. So anyway, that's all rubbish. But then he said this, quote, if you wanted to break up the banks, you wouldn't need a royal commission to do it, end quote. And that is spot on. For a different reason, the CEC said the same thing in a press release on the 11th of May. Quote, Australia doesn't need a banking inquiry to know that the banks are crooked and that the retail banks should be split off from all other financial services, a la Glass-Steagall. That was our quote on the 1st of May. Just quickly remind viewers how Glass-Steagall works, JB.
Glass-Steagall is where you split off the investment bank from the commercial or retail part of the banking. So you keep the essential part of banking in the real economy protected by the government, whereas the speculators in the investment banking, well, they can risk their own money, not risk everyone else's money by gambling with ordinary depositors' funds.
Exactly. So let's be clear though. We're saying that you don't need an inquiry to break up the banks, and that's true. We are also saying though, Australia does need a banking inquiry. It's just that you know, because there's a lot wrong with the banks, and preferably it should be a parliamentary inquiry, not a royal commission, because a royal commission is made to appear to be independent, but it can be rigged by the choice of commissioner and by the terms of reference. Whereas a banking inquiry where you get some of these politicians that are actually quite crusaders against the banks, if they get to have a say in a proper banking parliamentary inquiry, then that could go places like the Pecora Commission inquiry did in the United States Senate in 1933. That's the kind of thing we need. Because the banking crimes in Australia are systemic. That's the issue. And just in the last few weeks, we've had examples of that. 60 Minutes, a couple of weekends ago, exposed the Commonwealth Bank's abuse of a Cairns builder, right? Where they gave him, they kept throwing money at him, built up his debt to $160 million. And then, just weeks after the latest amount of money they threw at him, they demanded he reduce his debt by half. And the reason why is because the risk was starting to grow on the financial crisis was brewing. This was 2007. The risk was starting to grow. And on paper, they're saying, oh, Queensland is a higher risk. Because, by the way, is a higher risk because you had this outfit in Townsville, just below Cairns, called Storm Financial, which was lending money like crazy to property investors up there and people to against their properties to invest in the stock market on margin loans and things like that. So their book said, oh, it's a risk. So for us as a bank to comply with our risk profile, right, we are just going to say, we're going to pull our money out of North Queensland. So it doesn't matter the effect they have, right? Bang, pull it back and put biggest businesses like this guy on the street effectively. So that was on 60 Minutes. I want to play a video now, though, because there's two senators, Malcolm Roberts and John Williams from the National Party. They are presently conducting an inquiry into the rural banking crisis, and that, you know, the 60 Minutes story was for a guy that's sort of, even though it was his own business, it was a sort of a big operator in Queensland. What happened to him happens to farmers all the time that doesn't get the attention, so they're putting the attention on the farmers. And just this week in North Queensland, this is the kind of testimony they were hearing from the inquiry.
You've got to remember that at any time, and I did talk to this particular bank manager about it, he turned around and told me, yes, at any time, they can deem that your assets are below or value and they can foreclose on you whether you pay your payments or not.
So even if you're not in financial default or monetary default?
Yes.
Even if you're not in technical default?
Yes. They'll say to you they don't have to be qualified valuers. It's only the grass they value on. It wouldn't matter unless you've got a multi-million-dollar home on that place. Your house don't get valued. Your waters you put in aren't valued. Your fences aren't valued. And they don't have to have the valuation, you know, like if we get a valuer, we've got to pay for our valuer and get it. But we can't have that. I've had valuations done and I'm still not even allowed the forms that them evaluation people have. Yet I paid for them, $4.5 grand. The bank then turns around and said, well, if we do the valuations, we don't have to be qualified to value. This is what's putting us into receivership, people who don't have to be qualified to value us.
And what that woman who's a farmer is referring to there is that the banks stack the decks, right? And they get to decide if they want to foreclose on you. They don't need a reason. They can say, "Oh, your value. We deem the value of your property is much less than it should be against the debt you've got. And even though you've been servicing that debt, no, we're going to sell you up, right?" And they don't have a prayer, and this is happening all over the place. This is criminality. The reason you need a banking inquiry is it would establish who needs to be prosecuted. That's why you need a banking inquiry. However, you do not need a banking inquiry to know that Australia should conform to the Glass-Steagall principle as you laid it out. That should be a principle of the financial system all around the world, right? Here's gambling. There's an argument that you should make gambling illegal. The problem with, and I'm very sympathetic to it, trust me, but the problem is, of course, if people really want to gamble, they'll find ways to do it, right? So what's much more efficient is to say, all right, you're going to do that, here's a firewall. That comes over here, no way. Right? So
Can't risk everyone else's money.
That's right. No banks with deposits have anything to do with that. That should be a cornerstone principle of the financial system. And it was in America for 66 years until they repealed it in 1999. It was in the UK unofficially for decades and decades and decades. It effectively was in Australia as well until bank deregulation, right? That's what we've got to get back. Now, there's the global push for Glass-Steagall, which we report here a lot, Jeremy, is getting stronger. We've got a reading from the United States, for instance, where Donald Trump campaigned for a 21st Century Glass-Steagall Act. That's actually one of the reasons he got voted in. If he insists that the bill that's been put into the US Congress called the 21st Century Glass-Steagall Act, if he insists that comes to a vote, for the first time, there will be the numbers to pass it. Because what happens is, even though most of the Republicans and pretty much almost all the Democrats are on the Wall Street payroll, once they've got a vote, it's much easier for them in the US Congress not to have to vote on things. So they have this committee system where they just keep things buried, right? Once they've got a vote on it, they've got to account to their constituents why they voted against something that would protect them from financial predators.
Who would argue against Glass-Steagall? You've got to be nuts.
Exactly. There is no actual argument against it. The best they come up with is, oh, it's not going that far. Ain't really necessary. Well, no, it is, and so it's they don't have a leg to stand on. I want to play another video quickly where this week the leadership of the Democratic Party had a public event in Virginia, and they're scrambling to figure out how to get more popular, because even though they're attacking Donald Trump relentlessly for Russia and everyone, they're making him look like a total jackass, etc. The disconnect is that the Democrats' support isn't rising, right? Because the American people are actually not buying this whole picture, and they know the Democrats are mostly sellouts. So you have all the leadership on the stage here, and an associate of ours, Anita Gallagher from EIR magazine, in the audience asks a question about Glass-Steagall. Watch the video and look at the lady in blue on the left of the stage. That's Senator Elizabeth Warren who is the main sponsor of the 21st Century Glass-Steagall Act. Look at how she responds when Glass-Steagall is raised, and then look at her colleagues look at her.
Yes.
We agree the economy is in terrible shape, but the financial system is doing very well in terms of profits. I wonder why you don't go behind Glass-Steagall in a major way. Okay. It was Franklin Roosevelt's first piece of legislation. Okay. We're on the verge of a blowout that makes 2008 look minor.
So what you see there is, I mean, she's really Elizabeth Warren's really fired up about this. She was very excited that it got raised. Right?
Oh, it's a great little dance she did.
Yeah. All right, so for Australia, here's the thing. This is what people who watch this show every time, look, you've got to get involved, right? It's not just for information. We can make a change here. The CEC, as we mentioned last week, we've produced for members of Parliament, to the Australian Parliament, it's a proposal for a Glass-Steagall separation of Australia's banking system. And what we're asking people to do, call in, get yourself a copy of this to take to your Member of Parliament. You as a constituent, therefore, delivering to them. You don't even have to tell them much. If you get to meet with them, good. You just drop it off at their office if you don't. I'm a constituent. I want the Member of Parliament to act on this issue, right? And it's all explained in there. It's only 12 pages long. It's got graphs that show the state of the derivatives crisis in the Australian banks, etc. Call in on the toll-free number, 1800 636 432. Get a copy of that and get involved and take it to your Members of Parliament. When we come back, it's Jeremy's turn. We're going to talk about privatising assets. Welcome back to the CEC report. Stop bankers using workers' savings to cook up privatisation scams. So, Jeremy, what we have is a situation this week where Australian fund managers have been in the United States, and they're called IFM investors and others, including Liberal politicians. They're lobbying Donald Trump to adopt asset recycling as a model for funding infrastructure, because Trump has promised a big infrastructure funding, and America desperately needs its infrastructure. Watch the first minute of a very famous 2014 documentary called by the Institute of Engineers over there called The Crumbling of America. Just watch the first minute of that.
Collapsing. We've had some shocking glimpses. The levees in New Orleans, the interstate bridge that went down in Minneapolis, the massive East Coast blackout of 2003.
Imagine a month-long blackout. Imagine major failures of water delivery system in the West. Imagine levee breakdowns that can't be repaired.
We're headed down the road, without much exaggeration, to being a second world or a third world country.
This is the United States of America. Why is our infrastructure in such bad shape?
In our Australian Alert Service last week, Jeremy, in our Almanac feature, we talked about two examples, or a number of examples, of American infrastructure that's really bad. One is the Soo Locks between Lake Superior and the St Mary's River. And these are America's, a lot of its industry is around the Great Lakes, so they can use the cheapness of water transportation. It's a very good system, but it requires river locks, right? These are locks that if they went down, 11 million Americans would lose their jobs, right? Incredible. In the 1980s, they were told they're at risk of going down. The Congress passed a bill to, let's repair them. They never, ever, ever bothered to spend the money. And then in the last few years, they looked at it again, and some accountant did a study that said, for every dollar we spend, we'll only get 70 cents back, so don't worry about it. And that's the risk, that they're putting 11 million jobs at risk of that. That's one example. The other one example is there's a bridge over the Hackensack River, which takes a railway bridge, which is the main freight line down to Florida, up the east coast. When the bridge goes up, so that boats can pass underneath and comes back down again, the rails don't align, and workers have to get out there with sledgehammers to bang it back in place again. And if that went down, you'd shut down the entire east coast of the United States, right? And that's the kind of infrastructure they got. But they're not spending money on any of this stuff. So it's an absolute mess. They do need to spend money. And so you've got these people who said, okay, Donald, here's how you do it, asset recycling. So what is asset recycling?
It's actually what Joe Hockey pushed and got through in Australia, where the government privatises their assets to raise funds to spend on other infrastructure which the private sector is not interested in, where the private sector can't really make a killing out of it. They can make a killing out of toll roads, such as Macquarie Bank and the Macquarie Group now, and other companies where they can have user pay systems, and that's the assets that the private sector wants to tap into. But there's some other assets that the government needs to spend money on. So the government wants to raise money by privatising and then using that money to pay for other infrastructure, which is not necessary at all.
No, so why isn't it necessary?
Well, the government, if they did have a national bank, like the old Commonwealth Bank, that should never have been privatised, well, they'd have all the funds available backed up by the Commonwealth government. So we need to get back to government financing of infrastructure, not relying on the private sector. And privatisation, you can only privatise it once. Once it's gone, it's sold, it's sold.
And when you privatise infrastructure, of course, it sees the primary purpose of that infrastructure ceases to be infrastructure. They do it just to be a source of revenue for private investors. That becomes the primary purpose, right?
Well, that's the problem with privatisation, is it's a monetarist theory that this infrastructure is there for the common good of the people. It's not there as an income stream, because a lot of infrastructure, it really is not there for its isolated use.
That's right.
It's got to fit in with the whole economy. And for some things, well, the monetarists will say, well, it's just not economic to build this because it's not going to make money. Well, it forgets that there's a whole other economy that depends on this infrastructure.
The actual value in it, if governments do it, is that it makes the economy function cheaply because it's efficient, right? And that low cost is where your productivity comes from. They say, no, we want expensive infrastructure, we can make money out of it, and you can invest in our companies and get your cut that way, right? And what it actually becomes a dead weight on the economy. And they have this argument, if you don't do it, it's wasted capital just sitting there. And it's the same argument that they conned all these elderly people into with their reverse mortgages, right? Sitting in your home, look, this home, mummy, grandma, is wasted capital, right? you should get a mortgage against it and you can put that money to work. Whereas, a home is a home is a home, and a lot of people have been stung that way. All right, in Australia, just name some of the people, the main characters in Australia pushing this asset recycling.
Yeah, well, of course, we've had Mark Vaile, who's a former Trade Minister, Joe Hockey, of course.
Banker's boy, we used to call him.
Yeah, there's a whole list of them that we've got from the IMF investors, the Macquarie Group, there's Transurban, there's numerous.
And I noticed with Mark Vaile, a National, Joe Hockey, a Liberal, two other Liberals I've noticed, Peter Collins, former Treasurer, Opposition Treasury spokesman, New South Wales, Mike Baird, investment banker, former Treasurer. These guys are all pushing this, right? So anyway, let's take a break and we'll finish this after the break. So the cast of characters, Jeremy, we named before the break, pushing asset recycling. They've gone to the United States to lobby this as an idea, right?
And several times too.
Several times. Goldman Sachs, probably the most predatory bank in the world, has just drooled that in the United States there is $120 billion worth of public toll roads alone that could be recycled, which of course that's why, there's no doubt that's what Macquarie Bank's interested. It's bailiwick. Macquarie Bank is the company that set up all Sydney's toll roads, right, and things like that. And here's a quotable quote that gets forgotten, so I'll put it back up there. This is from 2003. A Macquarie executive named Dennis Eager got in trouble for saying this, not because it wasn't true, but because he wasn't supposed to say it. He said, quote, "We can put up the tolls by whatever we like, and almost as importantly, we can start the tolls on day one by whatever we like. If motorists don't complain about it being too high, then we won't have done our job," end quote. That's the Macquarie Bank attitude, right? So tell the story quickly of Macquarie Bank and the Indiana Toll Road in the United States.
It's a major farce. I mean, this toll road was originally built as public infrastructure in the 1950s, and then it was taken over. Macquarie Group had a share in it and just ran it into the ground. They actually purchased it with only about $400 million of the billions that would actually...
Macquarie got it because they bid way over everybody else.
Oh, way over.
But they put up of their own money just a small amount.
Yeah, and then it's leveraged. So they ran it into the ground, and then once it was gone, it went bankrupt. But the public have to pay. The tolls actually went up from about $4 and now they're around about $12. So the general public's a loser. And
what happened to the banks that lent Macquarie the money to buy the asset?
Well, then,
the European banks.
Then the banks have to get bailed out. The whole thing's a
farce.
All
6 of them in Europe got bailed out, the ones that invested in this.
The ordinary public bears the cost at the end of the day.
No, that's right. Now, Macquarie, when this went bankrupt in 2014, the Indiana Toll Road, they still made their money, right? Because Macquarie has a model that is sort of, it's a mafia operation, really. They always get their money because they get their money from fees. They set up these investments and then they're involved in setting up. Then they charge massive fees to the investors and to everybody associated with them. So they made squillions out of it. So their asset went bankrupt, but they didn't at all. In 2015, it got bought by this organisation called IFM Investors, which is one of the ones over there in the United States now pushing asset recycling. And this is why we've called this segment "Stop Bankers Using Workers' Savings to Cook Up Retirement Scams." IFM Investors is actually owned by 28 industry super funds in Australia. But I'm going to put on the board the faces of the board of this organisation and what they call the leadership team or the executive. 4 of these people, and we'll mark them, are from Macquarie Bank, right? So this is Macquarie working hand in hand with the industry super funds. And the worst part about that is industry super funds represent unions and union members. It's union members' money. Now, Jeremy, what would the average union member in Australia think about privatisation?
They'd be disgusted in it. And look, Paul Keating has set up this superannuation system in the first place to create a pool of money for this whole scam. It's absolutely disgraceful. The workers are getting looted here and in the United States when these banks and funds fund these infrastructure. They're not doing it for the good of the Americans.
It's to steal from American workers. That's what it's to do. So the Australian workers were told when Keating set up compulsory superannuation, it's for their future, right? It's for your retirement. That's what it's for. A huge fan of Paul Keating's a few years ago wrote this book. His name's David Love. And it's called Unfinished Business, Paul Keating's Interrupted Revolution. And he had a different take on it. Now, he's not exposing Paul Keating. He's cheering him on. His take on what compulsory super was set up for is, to paraphrase it, to create, like he said, a massive pool of money that Macquarie Bank could use and those kind of operations to buy private assets around the world. So I'll give you the key quote from page 82. Macquarie was on its way internationally. He's talking about the 80s now. It was hardly a household name, but among those whose business it was to judge these things, Macquarie was a real comer, not only in Australia, but in the world. From the Manchester bypass, Macquarie quickly spread its toll roads and tunnelling business to South Korea, Canada, Indiana, Chicago, and San Diego. Paul Keating's superannuation reforms would feed the Macquarie machine with the investment funds it needed to grow and prosper. And that is what's happening now in the United States. This is a predatory operation that it's actually criminal, right? So here's how I want to end this. If you're watching this and you're in any way associated with a trade union or have your money in an industry super fund, you should be making us think about this. This is unconscionable that Australia's industry funds, the from little things, big things grow, right, are involved in this scam. And it's time to say enough's enough. We wouldn't want to tolerate it here and we shouldn't let them push it around the world. But if you want to know more, call in and get a copy of the Australian Alert Service. This is elaborated in detail in there and you can get a free copy of that. Thanks, Jeremy. Thanks for tuning into the CEC report and tune in next week for more. The Citizens Electoral Council will be present at the Royal Adelaide Show from the 1st to the 10th of September. Come and see us at the Jubilee Pavilion, site G54.